Hi, this is Stuart Weems and welcome to the Investopoly podcast. My goal is to give you insights, strategies and tips to help you master the game of building wealth. And in this episode, I'd like to talk about how the emergence of working from home or the increased popularity of working from home will impact on property investing and asset selection. It's an article that I just wrote for the Australian newspaper that appeared on the 19th of May, and I thought I would riff about it a little bit in my podcast. So obviously, as a result of the coronavirus shutdown, more and more people have been forced to work from home, and very large companies have been forced to kind of mobilise their workforce and over a very short period of time send people home and make the necessary arrangements so that business can continue. And obviously there's been some teething issues in relation to that. We at ProSolution have had to do the same thing, obviously on a much smaller scale, but still have to deal with the similar teething issues. But we're all sort of adjusted to a new normal, if you like. And we've been able to resolve most of the operational issues, and in the main, most people are enjoying the flexibility that working from home provides. So the concern then is, once we all start working from home, then our proximity to the CBD, if that's where we're working or wherever our employer is, our proximity towards from our employer won't have as big an impact on our or maybe no impact on our decision where to live, and as such, maybe more people will be attracted to more regional centres on account that potentially a lower cost of living, and also housing, obviously, particularly cheaper as well. Now, obviously, working from home doesn't suit all businesses, industries, or employees or roles. But then again, it suits other roles a lot better as well. And there are some benefits, obviously, working from home, say fewer distractions, so more higher level of productivity. You get interrupted a whole lot less when you're working from home versus working in the office. And obviously, you eliminate the travel time, which can go both ways in terms of giving yourself more family time, but also more time to do more work as well. So the time that you'd otherwise be sitting on the train or in the car, you can get started on your email, for example. And it's interesting to note that Twitter was probably the first global business that announced that they'll allow their staff to work from home permanently. And certainly senior public service leaders in both Canberra and around Australia's states and territories are also talking about how they can accommodate that. So I think it's a pretty strong theme that's going throughout the economy. Of course, it's not all positives. I can see some really big downsides to working from home. You lose that sort of face-to-face connection with co-workers. And that's a really big benefit that we enjoy from working in a group and a team, is the sort of camaraderie and the relationships and the personalisation of it all. Be able to go in the office and sort of whinge about what's happened to you yesterday at home or whatever is a sort of cathartic process. And if we're just left alone in a room at home by ourselves all day, that's going to really weigh on employment satisfaction. So, look, I think we've got to sort of balance out this whole ideal that, that we're all going to work from home and nothing's ever going to change again, because I don't think it's going to suit everyone for an extended period of time. In any case, if it does occur, what impact will it have on asset selection, property investing, and the supply and demand principles? And that's really what I wanted to talk about or sort of uncover. I think the first thing that we need to think about is that there's many factors that go into informing our choice of location of where we want to live. Proximity to work or your employer might be only one of those things. One that really jumps to mind, particularly for a lot of our clients, is proximity from schools, education facilities for children, whether that's private schools, certain private school locations, or if they want to end up in a quality school zone for a public school. The location of where you're going to educate your children tends to be a pretty compelling and significant consideration when deciding where to live. Now, obviously, there's going to be good public schools in both capital city locations and also regional centres. So I'm not saying that good schooling is exclusive to capital cities. But again, it's one of those considerations of many to take into account. And you've just got greater selection, I think, in a capital city location, in a closer distance from each other where there might only be one or two opportunities or options in a regional centre, and that can play into people's decision making. Also, proximity to family. There can be two things associated with family. If people have older parents that are in ill health or need some sort of caring or attention, that living in close proximity to them makes the travel time a lot easier and to be able to deal with those issues, and makes them feel more comfortable as well. Also, for families with younger children, often parents provide pro bono babysitting services, which obviously can be very important. And living closer to parents so they're able to provide that sort of support while you've got young kids and young family is also important. Naturally, there's other considerations and these other considerations can mean that a regional centre is more attractive than a capital city or vice versa. But things like health services such as hospitals, other amenities such as entertainment, shops and restaurants and so forth, are all important considerations. For example, if someone's a surfer and maybe they like to live down by the beach, then a regional location might suit them better. Whereas if what you enjoy is going out and seeing a show or having dinner with your spouse or friends, then obviously a capital city is going to provide more options in relation to that. But also if your friends are in a particular location, and you move out of that location, you've either got to create a new network or that decision's not really going to suit you very well. The point is that certainly working from home alleviates the geographical consideration with respect to where we're going to live, but also there's arguably just as important or sometimes more important factors. And don't forget, in most households, you've got two spouses that work. So unless both employers provide that both spouses the opportunity to work from home permanently, then I think we can overstate the impact of this whole working from home movement can have on the property market as a whole. Of course, there's going to be patches, and it will have some impact. The question is whether that impact is material or not is a completely another factor. Or completely another question, I should say. So when investing in property, we need to understand, and I keep banging on the fact that asset selection is absolutely paramount. And one of the things with asset selection is that you must invest in an area with diversified level of demand, where demand always materially outstrips the supply of assets in that area. So the way I like to explain it to my clients is I'd say notionally what you want to do is buy an asset that notionally has 20 potential purchases for that asset for every potential property for sale in an area. And so that and those 20 purchases should come from different sort of socioeconomic segments. Some might be investors, first home buyers, upgraders, sort of empty nesters, retirees, wealthy individuals. They could be running their own business. They could be employees. They might have had inherited funds. The fact is you want those 20 people really to be from very, very diversified locations. Now, 5 of them might be kind of not as financially strong as the rest. and maybe 5 of them will have significant financial resources and always be able to pay more and more for particular properties in particular locations, but they're all going to look a little bit different. So therefore, again, notionally, if something changes, whether it's a tax rule or whether it's working from home becomes trendy for a period of time, and that has an impact on demand, a negative impact on demand, then perhaps, again, just notionally, perhaps your pool of potential buyers drops from not 20, but maybe 17. 3 people decide to have a complete life change and they're no longer wanting to live in a capital city location. So now you've only got 17 buyers. But as long as you've got more than 2 or 3 buyers for every one asset, you're typically going to get price or experience price growth over a long period of time, because as long as you've got competing buyers for a limited pool of assets, the prize, the purchase, always goes to the person that's willing to pay more. And that's what's ultimately going to generate sustained capital growth. So the best way to kind of mitigate some of these things or some of these risks, and working from home is only one of them. I mean, there's some talk about, for example, what about self-driving cars? What impact will that have? Because, that potentially reduces travel time as well. So there's lots of different risks, some of which we can identify today and some of which haven't yet materialised. There's lots of risks, but the best way to kind of deal with or mitigate some of those risks is to level up on quality. And that's really about buying a scarce asset. And again, as an analogy, instead of saying what we want to do is buy a diamond, what we really want to do is buy the pink diamond, something that's even rarer than a diamond. And that will weather most storms and most temporary or permanent changes in demand. At the end of the day, that's what's going to create long-term returns. It's not necessarily a case that it's going to beat every single location, but what it does do is it gives you the highest returns for the lowest risk. It has the greatest probability of generating quality returns, whereas you might, to some degree, look at a map and go, okay, well, if work from home becomes really popular, I think this regional location will benefit the most. And then you could make a really big financial bet and go and buy a property in that location. And it could, if you end up being right, over the next 10 years, actually generate better growth or higher growth than what an investment grade blue chip location will. But that ignores the risk, because it could also, and there's a reasonable probability, it could also underperform for lots of different other reasons as well. And so investing is all about achieving the highest return for lowest risk. And we've got to think about all the risks that can occur. So the working from home is one of them, but there's lots of others, as I've suggested. And not only just demographic things and changes in the nature of how we behave and act, but also there's macroeconomic factors as well. So there's lots of risks out there. And so what we need to do is think as investors, how do we invest in a way that reduces as many of those risks as possible? Almost betting on a sure thing, something that's guaranteed to drive growth over the next 10, 20 or 30 years. And if we take that very long time horizon, it might seem very boring and not very sexy, and it's probably not going to necessarily give us a 20% return in 1 year like a regional centre could. But what it will do is have the highest probability of working. And at the end of the day, that's what's going to make you feel good about your investing, is the fact that you're actually going to achieve your goals, and it's going to perform after a while. You'll quickly forget about all the overnight successes that you've missed out along the way. So there you go. That's working from home. I don't think it's going to have any substantial impact on demand for property in prime blue chip locations, particularly for well-selected assets. It's one of those things that's going to change over time, and I think also perhaps people are kind of overestimating the longevity of and the extent of people working from home. So that's it for me this week. Until next week, bye for now.